Hello traders, welcome to the Trading Market Technicals educational video on gap trading. My name is Mark and I'll be following up on a trade that we did on November 16th on OMX. And I want to explain a little bit more in detail following up on our previous video on gap trading. Now gap trading can be very lucrative, but, and I will stress this, if you do not adhere to your stops when you're wrong and you need to get out, it can be very, very damaging to your account, because what we're doing is, right, we're trying to fade a move in the opposite direction, and 90% of my trading is trend trading. I like to buy pullbacks, or I like to sell rallies on weak stocks, and I like to buy strong stocks. However, when you're gap trading, you're doing something a little different, right? You need a little bit of expertise because we need to identify the gap. Is it a retail gap or is it an institutional gap? Meaning, if the retail gap is a retail crowd that really can't support that move higher, the market will fade back to where that I think that stock should be. Whereas if it's an institutional gap and the gap gaps higher and continues to run in that direction because we have support from institutions buying that stock. Okay, so that's really what we're trying to identify. And in the morning, prior to the market opening, every morning I get into the office and I run my scans. Trading stocks that are trading higher, gapping higher in the pre-market, stocks that are trading low in the pre-market. And I try to identify what stocks I'm looking to play. And mind you that in the earnings season, it's very lucrative, and it can be, especially when you have stocks that are driven on earnings, good or bad. So we start off with a daily chart, and on my scan was OfficeMax, OMX. And they had some positive news come out, and I looked at the stock and I said, okay, first we want to identify, is it a retail gap or is it an institutional gap? And what is the stock doing relative to the S&P 500? So I look at the daily chart and I said, okay, in the pre-market it's gapping up higher. Where is it gapping to? And it's gapping right into this area of resistance, right? And as you can see, OfficeMax has been really selling off for the last 6-7 months, and then we kind of based for several months, and then we rallied higher on some good news, bull flagged, and then we kind of got stuck in this area, in this double top area, and today it kind of gapped up. Now that's actually very good news. That's actually good price action. But where did it gap to is what I'm looking for. Is there any major resistance in this area? But on the daily chart, you can see we have our volume profiles, and we're heavy volume in here, rightfully so, because we've been trading in this area for the last, 6-7 months. And we're light on the way down. So this could be a bullish sign that, hey, this may be institutions behind this move, buying the stock and probably moving higher. So what I want to do is now I want to look for my weekly chart. And the weekly chart shows me that we have a 200 week moving average. Now this is a significant area of resistance, guys. This is very important that we want to look for. I'm going to say, okay, right up in this area, that 200-week moving average, we also have an area here where we made a pivot, here, here, and back in this area here. Now, our volume profiles obviously show that we're kind of light up in here, but look at this area. 1062, where that was the high of that candle, was pennies to this other volume zone, which ended up coming really heavy area of resistance. So I said to myself, well, if this gapping into this heavy area of resistance and it's gapping up, this is going to be an opportunity to probably fade this. But we want to see what price action does first, right? All right. So now we want to look at what is it doing in relation to the S&P. So we do a symbol overlay, and on the previous video I've used Sterling Trader Pro, and this one I'm using NinjaTrader. So you can use anything you'd like. I just want to show that flexibility. And this is the OMX 5-minute and the Spiders 5-minute. And I put it in an overlay, and I said, wow, you know what, now this wasn't here, obviously, on a 5-minute, but I want to show you what the daily chart looked like. OfficeMax has been kind of holding its own, right? We drifted a little bit lower, doing this low, and then we kind of rallying back up here, right? Kind of this little sort of this bull flag. And this is just a very simple chart, just showing candlesticks, price action, simple price action. Well, back from September when we topped, we've been selling off where OMX has not. So this is telling me a bullish sign that we have relative strength to the S&P 500. Now let's take a look at, okay, where am I going to go with this thing? Where am I going to trade this? So I look at the 1-minute chart, and this is the pre-market area here, and we opened at 930. We gapped here. Now that's a significant move, but I'm not looking to sell into strength here because obviously it could be damaging to your wealth. So I'm looking at this on the side, and I continue to watch this and monitor this thing. We get our first pullback, which marks our first pivotal low, and that's going to be around 985. And as the stock continue to climb, breaking out of the Bollinger Band, right, which would be a sell signal, comes back, closes back in, that's a sell signal, flags, and runs up higher. So there's a pattern, right? We get our first flag, runs higher, second flag, runs higher, and our 8 EMA, which is our momentum moving average, that's hugging it. So, and you got the 20 right below it, which caught up. So now I'm saying, all right, where do I want to be looking for this? So I look at my 15-minute. So I'm trying to say, I'm looking for any type of sell signal, right? Because we need a trigger. So I look at the next 15-minute sell signal that would give me, and here's where we are, right in this area. So we had a break below our two lower wicks, which would be at 1023, price action 1023, 1015. This area here at 1030 would be, now I'm starting to look to get short. Okay, if it breaks below this area, and I know my stops would be at 1062. Okay, now you can make it a little bit lower. You can keep the lower wick, you know, based on your risk tolerance. But I know my entry is going to be 1023-ish. So now I get my first 15-minute sell signal. Now I dial it back down into a 1-minute chart. Right? And this is at 1030, was right up in this area here. Now if I just open this up a little bit, you could see. So at 1030, we get our first reversal. Right? We got a 15-minute sell. And we're looking for the 8 and the 20 to cross over. And that, sure enough, is what we got. So now I'm looking for the next higher low, which would be some sort of reversal candle. And the next candle move I would be looking to get in. Right? So we look at our 15-minute for a sell. And we look at the next move. So a lot of people think 1 minute might be a little too fast. So I do look at the 1 minute. So now I'm dialing back down to a 2-minute chart. And the 2-minute chart at 1030. We get our first reversal right up in here. So now I'm in the 2-minute chart. This area here would have been your first entry. If you wanted to take it, if you felt you needed a little more time, you would look for your next rally, which would be a flag, a bear flag into this area. And most of our members, we were trading, took this area here and this area here. Now where's your stop? Well, your stop could be the next high, right? So your stop could be anywhere above this candle at 1038, 1045, or really the high to be in it. And as the market broke down, you could see, as the market broke down, we knew we were going to come into some support area, which that pivotal low for the morning, that gap up and hold, which would be that 1085. Now, as the market started to creep down, you're moving your stops now from this area here at 1038, 1040-ish, down to this area here as the market continues to move. And as the market starts to sell off, it now catches this area of support, right? Which is that gap support area at 985. Now you're saying to yourself, okay, what do we do from here? Well, we have our stops here, and if we get stopped out, we'll make a couple of dollars on the trade. And if not, we will continue to ride this. And sure enough, as you can see, the market rallied all day. This did not. This had selling pressure all day. And a lot of guys took a lot of stock trades, a lot of stock off here, and some actually held it pretty much most of the day. And that's how gap trading works. If you can identify it correctly and you can protect and manage your risk according to your share size, you can have a very profitable trade in gap trading, long as you adhere to the rules. I hope you like what you see, and if you like to learn more about gap trading, please visit our website at www.tradingmarkettechnicals.com or email us at info@tradingmarkettechnicals.com. Thank you very much, and talk to you soon.